Ladies and gentlemen, a very good afternoon to all of you. It gives me an immense pleasure to welcome you all at Citibank Limited Earning Disclosure Q3 2020 web event. While scheduling today's event, our main aim was to select the most convenient time slot so that we could accommodate most of the participants located both in the foreign and local vicinity. I am Tapushi Salsabil Rahman, your host for today's event. As a bank, we believe in engaging our investment community, correspondent bank, and the media partners in our journey. And we believe in accountability and transparency in disclosing our performances and strategies. Today, we have gathered here to present about the contemporary financial position and forward-looking strategies of the bank. And in order to do so, we have present among us the most significant higher officials and management committee members of the bank. Ladies and gentlemen, may I please introduce to you Mr. Masroor Arifin, Managing Director and CEO, Citibank Limited. Mr. Sheikh Mohammed Maroof, Additional Managing Director, Head of Wholesale Banking, Trade Services, SME, Small and Microfinance. Mr. Mohammad Mahbubur Rahman, DMD and Chief Financial Officer of Citibank Limited. Mr. AKM Saifullah Kausar, Head of Internal Control and Compliance. Ladies and gentlemen, we also have present among us Mr. Mohammed Zavid Iqbal, Chief Risk Officer and Head of Risk Management Division. Mr. Mohammed Zafrul Hassan, Head of Digital Financial Services, Ms. Parul Das, Head of Finance, Mr. Mohammed Shah Alam, Head of Treasury. Respected MAN committee members, thank you very much for gracing today's event with your glorious presence. We shall be starting today's event by a presentation from Mr. Mohammed Mahbubur Rahman, DMD and CFO, presenting the financial performances. Then our Managing Director and CEO shall be addressing you all, and he shall be ending the event with a Q&A session. Ladies and gentlemen, we have already opened the Q&A portal, which you can see as a window at the bottom right-hand corner of your screen. You may place all the relevant questions there, citing your name. May I please repeat, please indicate your name while leaving the questions, and we shall be trying to answer them during the Q&A session if time permits. Ladies and gentlemen, without further ado, I would like to take the honor to call to the podium Mr. Mohammed Mahbubur Rahman, DMD and CFO, to start with the financial performance presentation.
Okay, thank you. I think you can hear me. Okay, good afternoon, all investors from home and abroad, correspondent bank, representative of press media, and our colleagues from this bank. It's our great pleasure to meet you after some time and present the financial performance of the bank for this year. And we hope that everybody is doing well during this very challenging time. In my presentation, I'll show the balance sheet position as well as the income, various components of the income statements and some key ratio analysis. So let's start the presentation. In my first slide, actually, you can see the most important component of our financial statement, that is the loans and advance. Here you can see that our loans and advance has grown by 20%. From 2019, reached 297.49 billion taka from 247.7 billion taka, and year-on-year growth is 15.7%. And if you look at the quarter-by-quarter figure, you see that every quarter we have managed a significant growth. When the industry has actually negative growth in loans and advance, we have grown significantly. And it shows that our strength in the core business of the bank. And in the following slide, you will see that what the strategy was behind this growth and who has contributed how much for this growth. Corporate and offshore banking unit, which actually contributes 60% of the loan portfolio, and they have actually managed the highest amount of growth, and we have been actually following a same kind of strategy for last few years. Actually, corporate and offshore banking unit, they have the capacity to give short-term loan in the market, and here in the graph you can see that every year we grow the loan in the first few quarters and then actually reduce the loan exposure at the end of the year, which actually gives us better return and also improves our capital position and improves our risk management, and also it will help us for the better liquidity management. And last year, here you can see that in September, the loan exposure in corporate was 151.8 billion, which has come down to 137.6 billion at the end of 2019. Again, this amount has actually increased to 176.3 billion at the end of third quarter. And when actually we present the final result, I will see that this exposure will reduce. And we are very much hopeful to have a similar good impact out of this strategy. And we have other focus area, that is retail and small and microfinance. We want to diversify our portfolio, but as we understand that these sectors have been badly impacted due to pandemic, and retail actually has moderate growth of 4.9% year to date. On the other hand, small and microfinance has managed a significant growth even in this pandemic period. It indicates that the activities all around the country was less impacted due to pandemic, and the small microfinance book has grown by 66% in this 9 months. And year-on-year growth was 119%, and it has reached 11.3 billion taka at the end of third quarter. The other books like card, commercial, and SME, card has actually got hugely impacted due to pandemic. Shops were closed, restaurants were closed. There were almost zero travel during the peak pandemic period. So that's why the card book actually hasn't grown. But on the other hand, the commercial and SME, they are moderate growth in this year. Here you can see that the contribution of various segments in the total portfolio of the bank. Corporate and offshore banking actually contributes 60% of the total book, which has which was actually 61%. And because of the growth in SME that we have already shown you, their contribution has increased from 15% to 16%. So our actual segmentation approach is going according to our short-term and long-term plan. Now the deposit. Here also you will see that the deposit has grown significantly also during this period with 10% growth, and year-on-year growth was 13%. Though actually you see that there is decline in the third quarter, but actually our customer deposit has grown consistently actually. And here the degrowth has come because we have released deposit from bank that we manage from money market. As we have actual surplus liquidity, so we have released $17.5 billion or 5 billion taka of deposit from bank, but our customer deposit has grown by 13.4 billion taka even last quarter. So and here actually you can see that customer is having very strong confidence about us during the peak pandemic period. Our deposit also has grown. So here you can see the outcome of various strategies and initiatives that we have been pursuing for last few years, and we have been sharing this thing with you, that we have taken many initiatives and strategy to improve our current and savings account and low-cost account. And here you can see the outcome. And even in this difficult time, our current and savings account contribution has increased from 35% to 39%. And we were hovering around 35% of CASA contribution for many years, and we have actually broken this deadlock finally, and the contribution of CASA has increased significantly. And here actually in the bottom, actually you can see the number of CASA account has crossed 1.1 million. The amount of CASA volume has increased from 81 billion to 104 billion. And we are not only just concentrating on acquisition of CASA, we are looking at how we are managing the low-cost deposit. And here you can see the low-cost deposit contribution has increased from 46% to 49%. So here actually also our strategies actually have yielded actually very strong result for deposit and low-cost deposit. Our CEO will explain more regarding the strategy, and then you will get more clear picture actually what is the strategies behind all this success. Here you can see that which segments are actually doing how much regarding this deposit acquisition. Corporate, they have established very strong cash management, and they have managed 11% growth. Retail is the actually major contributor for deposit, and their growth is also 11%. Priority is also growing at the 11% rate. And other business segments like commercial, SME, agent banking, they are also contributing significantly. Agent banking is a new business unit for us. When we started this year, our number of agents was around 300. We have crossed to 1,200 till today, and we are very much hopeful to touch 2,000 agent point very soon. And here you can see that the deposit from the agent banking business has grown by 44.8%. And another key feature of agent banking business is that 55% of the deposit from agent banking business is in the form of CASA. So I am skipping this slide. Now I'm going directly to the income statement. Here you can see that despite having around 20% growth in loan and advance, our interest income has come down from 19.7 billion taka in the same period of last year to 18.1 billion taka at the end of third quarter of this year, with 4% negative growth. And the main reason for this decline is the imposition of 9% cap from the 1st April 2020. You are probably all aware of this major change in the banking business in the country. If you look at the quarter by quarter movement of the interest income, you'll see that in the first quarter we have booked 6.9 billion taka of interest income, which has come down to 5.4 billion taka in the second quarter because of the introduction of new interest rate cap on all loan book except credit card. And this amount has improved a little bit in the third quarter because of the increase of the loan. And the yield on asset has come down from 9.7% to 7%. And later actually I'll explain actually how we have managed this decline of interest income from core business. So one of the main component of banking business, as you know, that is the deposit, and that is the main raw materials for the bank, and interest cost is the main cost component. And you have seen that our deposit has grown by 13% year on year, whereas the deposit cost has grown by 3.4% year on year. And you have already seen that we have managed CASA deposit, and we have also increased the contribution of low-cost deposit. And because of that strategy, we have managed the increase of cost of deposit very successfully. And you can see the movement of interest cost quarter by quarter here. And in first quarter, the cost was 4.2 billion taka, which has come down to 4.1 billion taka. Again, it has come down to 3.6 billion taka in the third quarter. So it is one of the actual best outcome of our strategy. And the cost of deposit has come down from 5.6% to 4.4%. And here you can see that how the yield on advance and cost of deposit and spread is moving over the years. And it has come down from, if you compare with the last year, then it has come down from 3.9% to 2.9%, around 3%. Actually, the banking industry, we think, has to accept this reality and adapt with these changes. And we are working accordingly. We have revised our strategy. We have actually trying to innovate new things to adapt with this new changes, new environment of the industry. So here actually you can see that if one opportunity goes away, then you have another opportunity. And here actually it happens like that. In this year, we had opportunity to have better return from investment from treasury bill and bond. Like many other banks, we have also grabbed this opportunity, and because of the efficient management of that investment, our investment income has grown from 1.6 billion taka in the same period of last year to 3.1 billion taka with 91% growth. And in the right side, actually, you can see that how the volume of investment has moved during this period. We have invested heavily in the treasury bill and bond, and we have offloaded it to realize the capital gain. And you know that capital gain is tax-free income for the bank. So it will not only improve the top line, it will also improve the bottom line. So, and you'll see in the later slides that how actually this has impacted our profitability. Then I'll show 2 slides on our non-funded income, which consists of commission, exchange, and brokerage and other operating income. And commission, exchange, brokerage income has actually increased by 8.9% compared to last year, and quarter by quarter it has increased. But I'll show in the next slide that how the business has been impacted by pandemic and how we have recovered it. And we have also got another hit from exchange gain. The exchange gain actually dropped by 25% because the market was quite stable. Exchange rate scenario was quite stable in the country. It's also good for the country that the country is building very handsome foreign exchange reserve, and foreign exchange inflow is very strong for the country. So it is for the macroeconomic point of view, it's good, but for the bank, actually it has reduced the opportunity to have better margin from exchange business. So the following in this slide, actually you can see how our business volume has been impacted and how much we have recovered from the pandemic situation. Export business, export, import, and remittance all have actually declined compared to last year. Export has declined by 12% for the bank. Actually, this picture is for the bank. Import is by 13%, remittance is 4%. But if you look at the quarter by quarter movement, there is also encouraging picture that we have recovered from the pandemic situation. Like export, which gives us exchange income, has come down from 386 million to 194 million in second quarter, which has again actually increased to 433 million dollar. So it has crossed the first quarter, and if we look at the current scenario, even the situation is much better now. So we are very much hopeful to end the year with positive note. And import again for the bank has actually decreased from 640 million to 354 million. It has increased to 546 million dollar. And again, actually, the current picture is showing much better picture. So we are very much also hopeful. And this import business has gives us actually letter of credit business and the commission income. Remittance, actually, though the country is having actually much higher growth in remittance, somehow our business is not doing that much well in this year. But the way actually is increasing in the third quarter. The figure that is shown in the third quarter, we are very much hopeful that we'll be able to mitigate the gap by the end of this year. And other operating income, 98% of other operating income comes from card business. And card business has got the major impact actually from the pandemic, because shops were closed, restaurants were closed, and other activities were closed in the middle of the, especially in the second quarter. And here you can see the volume, movement of the volume. In first quarter, the volume was, the revenue was 614 million taka. It has come down to 282 million taka. That is, the decline is more than half. And then it has come to, it has again increased to 515 million taka. And the current picture is showing also encouraging picture that we have come to the normal level almost. So But with this impact, our credit card income has actually declined from 1.7 billion to 1.4 billion taka. So here actually you can see a summary of what actually I have already explained. Revenue in total actually declined by 4% from 14.1 billion taka in the same period of last year to 13.5 billion taka. But if you look at the quarter by quarter movement, then you'll see that first quarter we have done well, and second quarter has been impacted by 9% interest rate and the pandemic situation. But the situation has improved drastically in the third quarter. So here actually what I wanted to say that we have managed the major decline of interest income by managing our interest expense, by having better investment income and moderate growth in a commission income, and through this actually balance sheet management and other initiative, we have actually decreased the impact of negativity in this year, and the negative impact in the total revenue has only 4%. So now the cost part. So how actually then when actually we have got impacted due to 9% interest rate and the COVID, we have taken a major initiative to cut cost and control cost in some area, and we have also done it very successfully in this year. The cost growth was only 6% compared to last year. In the same period of last year, the cost was 7.8 billion taka, which has increased to 8.3 billion taka. And if you look at the quarter by quarter movement, then you'll see that from first quarter the cost has come down, but in the second quarter it has increased a little bit. Here actually we have to mention that being one of the leader in the market, one of the top brand in the market, we can avoid our responsibility as a socially responsible organization. So we have contributed significant amount to the as a corporate social responsibility. We have contributed 250 million taka in this year for pandemic reason, and also country was suffered by heavy flood this year. We have also helped the flood victim with this amount, and we have also given special allowance to the bank employees who have worked during the peak pandemic period. Especially the frontline employees has got this benefit, and we have also given additional insurance coverage during this period. So it is to boost the morale of the employee. So here actually we are showing the total cost in the two different way. The one is the staff cost, another is the other non-staff cost. So in staff cost, you can see that we have actually reduced the cost drastically. We have cut salary without retrenching any employee. That is the strategy of the bank. We have also adjusted some benefits of the bank from the staff salary, and and we have stopped recruiting new employees. And here you can see that how actually we have reduced the cost of staff from 1.45 billion to 1.3 billion, and in third quarter it was 1.2 billion. So we are one of the few banks in the industry who have done it very successfully. And on the other hand, the other cost has also decreased, but it has also increased a little bit. I have already explained that how actually how much we have contributed to the society. So here again, you will have the summary of what actually I have explained so far. With declining interest income and increase of investment income and little bit increase of operating cost, the operating profit has come down from 6.2 billion to 5.1 billion with 17.6% degrowth. But if you look at the quarter by quarter movement, you will see the encouraging picture. In first quarter, our operating profit was 2 billion taka, which has come down to less than half, to 973 million taka, which has again increased to 2.07 billion taka. So so we are very much hopeful that we'll be able to continue this growth in days to come, and we are hopeful to end the year with very good result. Now the provision. Before our debt charge, actually, before explaining it, first, actually, I'll draw your attention to the middle of the slide. Here, actually, you have to, you can see that the non-performing loan in volume has come down from 14.2 billion to 12.5 billion taka, and NPL ratio has come down from 5.8 billion to 4.2 billion taka. So actually the non-performing loan actually reduced, and we have actually managed this through collection, cash collection, right of recovery, and some rescheduling. So we have managed the NPL very successfully in this very tough situation, and there is no actually impact of any benefits that is being offered by central bank. So it is actually purely done based on the collection and normal rescheduling. And also the NPL, but debt charge. That's why actually you can see the debt charge has come down drastically compared to last year. Last year, in 9 months, our debt charge was 1.2 billion taka, which has come down to 289 million taka. But if you if you look at our financial statement in detail, you will see that our general provision has increased by 720 million taka. But because of the reduction of NPL, there is release of a specific provision. That's why in net, the debt charge has come down. But we have actually maintained additional provision, and it is reflected here. If you look at our NPL coverage, then you'll see that our NPL coverage has improved drastically from 65.5% to 91.4%. And we are really hopeful that we'll be able to improve the NPL coverage ratio at the end of the year. And here I need to mention that central bank has also given a new circular for reduction of NPL rate for retail book, and we haven't taken any benefit yet so far. So this coverage ratio and the debt charge actually position will actually improve in coming days, as we are one of the leader in retail banking business in Bangladesh. Now the profit after tax, the bottom line, because of successful management of NPL and debt charge, we end up with higher profit after tax. And profit after tax was 2.6 billion taka in the same period of last year, which has increased to 3 billion taka with 17.7% growth. Earning per share accordingly has also improved from 2.58 taka to 3 taka. And if you look at the earning per share quarter by quarter, the first quarter earning per share was 0.75, second quarter 0.3, and third quarter is almost 2 taka. Now I'm showing you the picture of our subsidiary. Better look at this slide. It gives you better picture in one shot. We have 4 subsidiaries. 2 are operating in Bangladesh, 2 are operating outside Bangladesh. Brokerage, they are the leading brokerage house in Bangladesh. Their operating profit has improved. Here you can see that from 99 million taka to 236 million taka with 138% growth. And the bottom line has also improved. They have incurred loss last year with 39 million taka. They have earned profit 102 million taka this year with 361% growth. Our CBCRL, Citibank Capital Resource Limited, is a merchant bank. Their revenue operating profit is almost same with little bit 1% little growth, degrowth. But they have managed their profitability, and the profit was 140 million taka last year, and this year it was 146 with 5% growth. Cbl Money Transfer, this is a subsidiary we established in Malaysia for remittance business, and they have done tremendously well this year. And their business volume has increased by manyfold, almost 7-8 times this year, because remittance has grown for the country, and they have also grown significantly. And here you can see their operating profit has increased from 7 million taka to 55 million taka with 727% growth. Accordingly, their profit has grown from 7 million taka to 55 3 million taka with 700, almost 7% growth. And the last one is Cbl Hong Kong Finance. Actually, we have established this business 1.5 years back. Actually, we are a little bit unlucky. You all know that Hong Kong has suffered some political turmoil and also followed by COVID. We are actually quite positive because we have seen that their business and operating profit is improving recently. So we are hopeful that it will recover from this losing situation to profitable situation very soon. So here some of the key ratios of the bank. Shareholders' equity has increased a little bit and reached to 225. Sorry, I'm having some problem with my computer. Shareholders' equity has increased a little bit and reached to 25.5 billion taka. NAV has increased by 11.4% from December, from 24.1 taka to 26.9 taka. Return on equity on annualized basis has improved from 10.7 to 15.9. Return on asset has improved in annualized term from 0.8 to 1.1%. And here actually you can see that how much we are strong in liquidity. The advanced deposit ratio is now 79.3%, and at the end of it was at the end of September, but still we are hovering at 79-80%. So this is almost the end of my presentation. Our consolidated capital adequacy ratio is 12.6%. Tier 1 capital is 8.3%. You are also aware that we have got approval from SSC and Bangladesh Bank to issue perpetual bond, and for that we are going to have AGM in the middle of November, and after that we'll raise the fund, and after raising this fund, our capital adequacy ratio will be improved by 1.5% at least. So with this, I'd like to actually end my presentation, and definitely you will hear more and more in-depth story about the City Bank from our CEO. Thank you all.
Thank you very much, sir, for your insight. Now, I would like to take the honor to call to the podium Mr. Masroor Arifin, Managing Director and CEO of Citibank Limited, to speak about the views and forward-looking strategies of the bank.
Thank you, our Deputy Managing Director and CFO, Mahbubur Rahman, for a thorough presentation on the financial health of the company in the first 3 quarters of this year. And also present with us at the podium is our Head of ICC, Saifullah Kausar, and also bank's Additional Managing Director and Head of Wholesale Banking and few other businesses, Mr. Sheikh Mohammad Maruf, and a few of the Mancom members who are present here. There is hardly anything for me to say other than saying that I'm grateful to the investors, those who are attending this, and those who are perhaps quite happy learning about our good performance in the first 3 quarters of the year. But I would like to start initially by paying my tribute and also remembering, sorry, there is some conversation. Okay. And also, I am remembering 3 of our staffs who have died of coronavirus, COVID. So far in Citibank, we have been hit badly. 325 of our total staff got coronavirus impacted, including myself. And lot of security and safety measures have been taken in the bank. Disinfections of bank premises is one. Ensuring, increasing medical insurance for bank's employees is another. Now, let me talk at the strategic levels of the bank, where we are heading. In bank CFO's presentation, you have seen that bank's CASA mix has changed, from 35%. Now the current and savings account mix has come to 39% from 35%. In the net growth, if you look at the low cost deposit growth, is my microphone working? Okay. In the if you look at the growth of low cost deposits, low cost deposit is defined by any deposit where our cost is less than 4%. Their increase has been 49% versus 35% of last year. Meaning we have grown BDT 88 billion in low cost deposit. Total deposit has grown 43 billion BDT. Now I would like to draw your attention upon a few of the bullet points. One is the reduction in cost of deposit, which has reduced from 5.6% to 5% in this last 9 months' time. So this is one of the reasons why we could do so much well in first 3 quarters, despite being hit by coronavirus, despite having a very bad second quarter. One top reason is our ability to manage the cost of deposit nicely. Overall fee income has dropped, but at the same time, fee and commission income from LCs and brokerage income, that has also given us 9% growth. For me, another important thing is annual fees from debit card has increased significantly. It has doubled from 44 million BDT to 81 million BDT. Another important thing is, people have taken up the habit of doing banking with Citibank over the CityTouch internet banking app. So that growth, 2.8 million taka of CityTouch internet banking fees has grown tenfold. It has become 20 million taka. So these are all indicators that in certain areas, at the same time corporate bank has done well. So there has been an increase in deal restructuring fees from 64 million taka to 230 million taka. But I'm coming to my points, initially giving you a little bit of preambles like this. Cost reduction measure wise also we were quite, I would like to say we are quite smart. The cost to income ratio, if you look at that has increased from 55% to 62% in this year. Because of what? Because revenue has decreased by 4.3%, and generally total cost has increased by 6%, but the revenue component, the increase in revenue is a bigger figure because revenue has been bigger than cost figure. So while the revenue has decreased by 4.3% and cost has increased by 6%, but we are still happy because we have run few of the cost management initiatives which has started bringing fruits for the bank. I am not looking at the total figure, but I am looking at the fact that if those measures were not taken, the total cost increase of 6%, as per last year's ratio, if you look at the increase would have been something like 15%. So our success is that we have been able to tame down or able to rein down the cost within 6% of growth. Now, one of the major thing is our salary. We took a salary cut of 10% and other staff facilities cut, which has contributed, from the forecast we have saved 424 million BDT from the forecast. And also in the other operating cost area, we have successfully been able to renegotiate the rental expenses with our landlords. We have successful in renegotiating the AMC expenses with our software vendors and also our advertisement and business development costs. Overall, other operating expense, total savings we have achieved is 363 million, again from the forecast. So these are if the forecast was true, today this kind of PAT wouldn't have been possible. Another thing is this year, it was a non-discretionary participation in the CSR activities of the country, for which we had to take 250 million taka of CSR expenses. Without that, the cost income ratio would have been not 62%, but actually 59%. Now, on the debt charge size and provision side, Mahbub has already explained, this is one of the big success stories of this year. Like cost management has been a success story, CASA growth and low cost deposit growth, this has been a success story. I will coming to other few minor level successes later, but before that, another great one without taking any central bank payment holiday related benefits. Another great success story is in the provisioning and the debt charge area. Overall 720 million taka of general provision and extra provision of 230 million taka. In total, general provisioning, because loan book has grown around 50 billion in billion taka. 50 billion taka roughly, 449 billion taka of loan growth has happened. Due to that, we had to take general provisioning. So that has given a cost, and also extra provision we have kept 230 million taka. Overall 720 million taka of new provision expense has been taken, of which 490 million is due to business growth and 230 million is due to the extra provision. But we have achieved a recovery of 460 million BDT. That recovery has come 900 million, I'm confusing about crores and millions. There has been a recovery from NPL of 900 million, of which we have had a provision impact of 300 million, and right of recovery of 160 million. So only two figures matter. I'm so sorry. 300 million we have recovered from the main NPL book, provision impact wise, and also we have recovered 160 million from the return of book. So in total 460 million has been our recovery, and as I said earlier, 720 million has been our general provision cost, including the 230 million of extra provision that you have kept. Overall, that minus this minus that, 72 minus 46 in terms of crores of taka, we have taken only a hit of 26 crore, which is 260 million BDT. That is the reason operating income wise there has been a slump from last year, but PAT wise there has been a growth. If you look at the company wide, solo basis PAT, Mahbub has already explained that to you, that PAT wise Citibank has achieved growth of 17%. Consolidated PAT has increased from 2.6 billion taka to 3.08 billion taka. That is the reason consolidated EPS has also grown from 2.5 taka to 3.04 taka. So that is the basic bottom line, the message to the investors, that in Citibank we are taking care of your investments in this bank. We are taking care of profitability of the bank. We are taking care of cost of the bank. We are taking care of NPL management of the bank. And now strategy wise, yes, we have been hit. Yes, the trade volume has, at some point in time, January trade volume was, export volume was 141 million US dollar. That came down to only 38 million US dollar, and now we are again at 158 million US dollar monthly. And if you look at the import volume, it came from 240 million US dollar in January, came down to only 77 million, and now we are again up at 220 million US dollar per month in terms of our export import volume. Now Mahbub has already mentioned about capital. Capital wise, if you look at regulatory requirement of tier 1 capital in the consolidated basis, if you look at, we have maintained currently 12.6%, requirement is 12.5, and in solo basis our current capital is now 13.7, requirement is 12.5 again, but there is a little bit of tension-filled news for us is that in Tier 1 capital, we are little below, 0.2% below. Instead of 8.5%, we are maintaining Tier 1 at 8.3%. This has happened basically due to the huge growth of lending of around 50 billion taka this year. But we'll be managing it. We'll be managing the lending book in the last quarter. We'll bring down the book a little bit. That will release a lot of capital, and we'll also work on risk-weighted asset side of calculation. And plus also we are in the process of launching a Tier 1 additional, a Tier 1 bond, perpetual bond we call it, of 4 billion BDT. So that will directly add to the Tier 1. So we are not too much worried about that. On the strategy wise, what is happening in the bank is that our whole focus is now on the, I will take another 5 minutes maximum so that at least you can have 10-15 minutes on question and answer session. Our main focus is on digital financial services. A full-fledged and dedicated DFS team has been built. We have launched Nano Lending with Bcash, the country's first digital loan over phone. We have disbursed so far 2,400 nano loans. Volume is tiny one. It's a pilot phase going on now. 2.5 million taka has been disbursed, but someday these will be something like 25 to 30% of bank's total lending book, I can assure you. That is the real strategic goal. Our agent bank side, if you look at agent banking business of the bank, that is also is a great source of low-cost deposit for the bank right now. Agent banking total channels from last year, it has grown significantly. We have added something like 1,000 new agent bank points in this year. Now the number of agent bank points is, agent outlets is from 330 to 1171 agent bank branch Citibank now has. And agent bank deposit book is 2.25 billion BDT, of which 90% of which is actually low cost deposit. In our definition of low cost is where the cost is below 4%. So this is a strategic move. We have recently launched one app, the country's first end-to-end app of digitally account opening app. So we have earlier we have launched the digital loan, which is our nano loan with Bcash. Later on we'll think about digital loan in other sectors like a small sector, medium sector of the business, not I'm sure, and also retail sector of the business, so that people can get loans digitally. If not corporate banking customers also, they will someday get it also in a similar manner. But now what we have done is we have solved the deposit side puzzle. We have launched Akhuni account. Akhuni means right now. Account right now. That is a digital account app, opening app. Anywhere in the world, you can go to Apple Store and Google Store and take the Akhuni account of Citibank app, and you can open an account end to end, which is hooked with the country's national database. Within 12 days or so, we have already opened 10,200 plus new accounts, and which has given us something like 20 million BDT of new balance, which is low cost, which these are not fixed deposit, term deposit. These are all simple current account and savings account. So meaning, Citibank, our main goal last year, I said that main goal is to build a scale. Main goal is to capitalize on the scale that this growing economy of 180 million people provides to us. So we are actually, we have stopped being a bank only for a few corporate bodies. Rather, our focus, instead of taking focus from corporate, we are focused on the growth of the, all the growth figures will show you this year. As I said, 49 billion taka of growth has happened in the lending area, and 38 billion of that is corporate, but that also tells you that 11 billion taka of growth has happened in the retail area, in a small area, in credit card area. So this is the turns we are taking now. We have also launched WhatsApp banking. Per day there is 1500 plus transaction happening daily. This is a cost effective way to stay connected with your bank. So other than that, I would also like to focus on SME, small sector lending. This year, despite having corona, We have a zero default book, zero NPL book. It's a 2.5 years old book now. I can only tell you here, a good thing is in January to September period, we have disbursed new 6.93 billion taka of SME small and microfinance segment lending. Overall, my idea, we have also launched QR code. We have launched QR code, interoperable QR, meaning, at the shop fronts, we are the largest player in credit card industry, something like 35% market share in card plastic we hold, and in the POS acquiring sector, we hold 35, 36, 37% of the market share. Now, in that area, we have launched QR code. QR code is an easy solution. Not even 1 taka is the cost, but our plan is to put QR codes in all the shops. Our ultimate aim soon, since QR code has been launched, Ekhoni account, digital account has been launched, digital loan has been launched, partnership with Bikash has been built. Now the goal is to launch credit card digitally on inside your phone within the CityTouch app, so that you can transact through the app using the QR code at the shop fronts, and this is interoperable QR. Even if your credit card is issued from abroad, and there also you have your card in your wallet issued by in the bank of your country, you can come to Bangladesh and use the same QR code. Similarly, Bangladeshis can go anywhere in the world and use the QR codes, place their shop fronts at any Visa, MasterCard and Amex holding shop fronts. Overall, I would like to say that the profit has been good. I would say that definitely there has been operating profit growth. If you look at consolidated basis, there has been negative 17% operating profit growth, but due to our good management of the bad debt, of the stressed account, and of the NPL book, of the rescheduled books, and our achieving great recovery, and also actually due to that, our net profit has increased by 17%. Now we have done 3.08 billion of PAT, and I have already told EPS of 3.04 taka. I believe, stay tuned with Citibank. Citibank is a bank which is taking full advantage of the country's change in the growth pattern. We are big in power sector because power has become a big issue. Similarly, we have grown big in credit card because credit card has become a big, substitute of your cash. We are mindful about all the sectors, retail, small, card, medium segment and corporate segment. We are also getting big in trade. We are also focusing on low-cost deposit. Overall, our whole vision that we have taken last year, we told you, our commitment to people, our commitment to people's development, everything has started giving us fruits finally. And that is the reason we have had this thumping and brilliant third quarter without taking any help, without hiding ourselves within the regulatory related payment deferment help the other banks are enjoying. We have not done that. Rather, I have told you the figure as well. We have kept extra provision of 230 million taka as of today. In the last quarter also we will take further provision. We will not budge from our credit quality management standards and guidelines. I believe there I can end, and we are fighting COVID. We wish you good luck. Our employees are, as I said, 3 have died at the initial stages of coronavirus attack. Now the things are stable. Every curve is now better. Credit card even, which is a great contributor to our fee income, is also doing better. Overall, with that tone of optimism, hope, and with wishing good future for all of you, wishing good future for every Citibank employees, investors, I am concluding here. Thank you. Thank you.
Thank you very much for your eloquent word, sir. The first question is from Ms. Tania Akhtar. She said, how much have you lent through Bkash Nano Lending project? What is the revenue sharing models for this lending? And Mr.
Hello, this is Zafrul, the head of the Hello, Assalamu alaikum. This is Zafrul. I'm in head of DFS. So far we have, 2.5 million that we have disbursed to the customer. I mean, we are doing it very cautiously because this is first time in the country that we are lending based on alternative credit scoring, following the alternative credit scoring method. So we are building it very, conservatively. We have planned to scale up, so we will do it very soon. You will see a scale up of that. Second part of the question was that's revenue sharing. I mean, there is a revenue sharing that I can tell, but I will not say because this is a business secret between us and our partner. So I will not be able to disclose that, but there is a very reasonable understanding between us and hope that that will continue and we will do the scale up very soon. Thank you.
Thank you, sir. The question is, what is your expectation regarding NPL ratio when BB regulation for delaying default loan expires next year?
Thank you. I'm Jabid Iqbal. I'm the Chief Risk Officer of the bank. Our present NPL ratio is around 4.2%, and when the BB regulation expires after December this year, we expect will remain below 5%. The next question, what is the quantum of loans under moratorium as of September? As of September, the portfolio, around 30% of the portfolio availed the central bank's moratorium. The remaining 17% is following the repayment schedule.
And the next question is, what is the loan rate of Nano loans?
So, I mean, yeah, we charge customer 9% plus a minor processing fee. Yeah.
Quarter trade finance operations. And Mr. Sheikh Mohammed Maroof, Additional Managing Director of Citibank, shall be answering that.
Hi, good evening everyone. The question is, what will be your major focus for last quarter trade finance operations? As you know that the country's trade volume is bouncing back, and if you compare the last quarter's trade volume as opposed to the same period of last year, you'll see that the slight growth in the area of export. So I mean, our focus in trade focus will remain, and I think that we will see a good growth in the area of RMG and textile. But having said that, we must keep in mind that the UK has gone to 1 month of holiday, and some of the Europe is going through the same as well because of second wave of COVID. We are yet to finalize or understand or assess the impact of that overall RMG export. But the way we see the order book of our RMG customers, it looks quite full to the end of January. So we expect a good flow of volume of trade finance from RMG and textiles. Thank you.
Thank you, sir. The next question is, investment other than the treasury increased by 160 plus crore in quarter 3 2020. Where have the investment been made mostly? This question will be answered by Mr. Mohammed Shah Alam, the head of Treasury, Citibank.
Hi, this is Mohammed Shah Alam, head of Treasury of the bank. The question is, the investment other than treasury increased by 160 plus crore. This investment was in mostly short-term treasury bill and bond. Short-term treasury bill means 1 year treasury bill and 2 year treasury bond. That's it.
Thank you, sir. The next question is, what is your guidance for loan growth for 2021? This question will be answered by Mr. Shah Alam again. Oh, Mr. Sheikh Mohammed Maruf, Additional Managing Director, Citibank.
Thank you. The question is, what is your guidance for loan growth for 2021? As probably our MD and CFO mentioned that we are a corporate heavy bank, but we are gradually trying to move away from corporate growth to the area of retail, SME and card area. So the growth in the area of retail, card and digital finance will be higher than the growth of corporate. Corporate grew on an average of 20% plus this year. We expect that next year, given the liquidity of the country, the overall bank loan growth book will remain within the area of 15%, right? Of that, the growth in the area of retail, card and SME and DFS will be more than 20%, and the growth of corporate will remain from 10 to 15%. Thank you.
Thank you, sir. The next question is, where do you see Citibank after 3 years? What can we expect for loan portfolio combination? Currently, it's mostly corporate. What changes can we expect for portfolio mix?
After 3 years, there will be right now 60% book is lending book is corporate and 40% other books. After 3 years, it will be corporate will come down to 50%, and the 10% which corporate will not, corporate 10% will be coming to the other side, which will be mostly retail, small microfinance and digital nano lending. That will take up the 10% growth that corporate will not be having. So basically this bank will have 50% corporate lending book and rest 50% a mix of retail, small, digital and also medium sector, of which medium sector will be the slowest and digital financial services, retail and small three will be the highest. They will be having the highest growth figure. Thank you.
Thank you, sir. The next question is, what is the current NPL ratio in SME segment? Mr. Zavid Iqbal, Chief Risk Officer.
If you look at our SME segment, there are two sub-segments, that SME medium and SME small business. So small business is a new business that started 2 years back, and literally the NPL ratio is 0 there. Our medium segment is little bit suffering from some legacy issues. The NPL ratio is there around 18%, 17-18%, but we are taking good care of it. We have segregated book into the good book and bad book. We are gradually trying to reduce the bad book and grow the good book.
Thank you, sir. The next question is, do you expect any rate cap relaxation for SME loans soon?
No, we are not expecting any relaxation of SME loans rate cap. We have been talking, I am also an ABB, Association of Bankers governing body, very active member. We have been talking about it with central bank, but we have been recently given a clear indication that talks are going around. Talks will always go around, but country's top decision making level is not really interested about looking at the SME rate caps. Also deposit rates are going down, which will make it more difficult as far as your request for rate cap relaxation is concerned.
Thank you, sir. The next question is also SME related. It says, what factors, despite economic slowdown, drove such a high growth in SME lending?
Hi, this is Maruf. Again, the factors, if you see the SME, we mentioned that in SME is small and medium. As a bank, we see that we'll be growing heavily in the area of small. The reason being that it's a large economy, and our economy is very much consumption driven. It's an economy which is very resilient, and we're seeing that the economy is bouncing back. The consumption pattern is coming back, and the small area where we see that people are located in the area of small pockets, small village and small areas. That economy is very vibrant, and we are seeing that. I'm sure our CFO mentioned that in particular area the NPL ratio is also very low. So my individual take is that because of our economic the way we operate, the consumption pattern and demography of the country, SME segment is very vibrant, and as a bank we have a strong presence there, and we'd like to grow, and that's the area we'll focus. I mean, even in this particular pandemic area, our loan book is growing 150 crore a month, and we expect that the book is right now around to 1200 crore, which will go to the area of 3000 crore by the end of 2022. Thank you.
Thank you very much, sir. It seems that we have reached to the end of this event. Before concluding, on behalf of Citibank Limited, I'm thanking you all for bearing with us and gracing today's event with your glorious presence. Thank you very much. Enjoy the evening.